Hey guys, what's going on? Welcome back to the channel. So today I want to talk about how you could possibly lower your property taxes. And I want to talk about a process that I just recently went through with one of my investment properties. It's a short-term rental, like on Airbnb. That's where we rent it. So I want to show you what I did and kind of walk you through the whole story. So I got my property tax bill and I was looking at it and I was like, man, this is just getting higher year after year. Of course, you're probably experiencing the same exact thing. And I was looking at the percentage increases because I kept reading that, okay, it can only go up by a certain amount each and every single year. For rental properties in my location, it can only go up by 10% each year, not the bill, but the amount that's assessed. And if you have a residential property that you homestead on, that would only go up by 3%. But there's a whole another side to that makes the investment property a lot more expensive each and every single year. But in either case, I want to walk you through what I did because you can do this in any instance. And there's a couple of things that you could do to fight it. But let me show you these numbers first. So here is the property or the property taxes on this investment property that I've had since 2015. That first year, it was $2,069. And that's basically what I was going off of in my head when I was looking at it. I was saying, okay, this thing is $2,000 in 2015, and then it's $4,500 in 2022. So I put it in this Google sheet and you can see the percent increases. Kind of odd to me that every other year it goes up by double digits and then kind of like a lower amount in these other years. But in any case, I was looking at this, I'm like, this is crazy. And on average, that is 12%. So I just thought that was too high and I wanted to figure out what we can do to lower it. So the first thing I did was obviously look at these numbers. And then I went in and started looking at some other properties in the area to just kind of get an idea, which is a lot more difficult than you would think because every property has a story. You know, maybe your neighbors lived there for 40 years. So they're going to have maybe a homestead exemption that goes back 40 years. So their amount is going to be significantly less. Maybe you have some other neighbors that have different exemptions and there are a handful of them. So it's really difficult to figure out like apples to apples on your tax bill versus another. But in any case, I was still, hey, this isn't good enough for me. I want answers, and I was digging in a little bit deeper. So here's what you can do. There's the way that you can do probably the easiest, but the most expensive is just going out and hiring a property appraiser to get that value, and then you can submit that to your city. Or you could fight through a petition. That's more of a formal process. Or third, you can kind of do what I did, and that's just call the property appraisers at your city, not your personal property appraiser, but the one that actually assesses the value of your property. Now, there are two different divisions, or at least that's what we have here in Tampa, Florida. That's where my investment property is, and that's where I live. And that is the tax collector, and you have the property appraiser, and then you have your state government who's going to set that millage rate. And that is the rate that gets multiplied by per thousand of your assessment. So a lot of moving parts here, way more complicated than it really should be. But just be aware that each one of these divisions is responsible for something different. So that's where I started. I went to the property appraiser and I fought them and I argued with them. And they were very nice about it. But I wanted lower taxes because I think that this is ridiculous that we have this 10% cap. So here's exactly what they told me. They said, the director told me to go out and find other comparable properties to make my case. So here's what I did. I pulled up Zillow, good old Zillow, and I looked at properties that were sold in my area for a price that was relatively close to my property, I guess, value, if you will. So I capped it at $250. Obviously, if you have a property that's a lot more expensive or less, then you would adjust that. That's what I did. And then I went over here to this last tab, the More tab, and then I just narrowed it down to the last 12 months. I used 12 months because this is 2022. We're currently in 2023, and they were using the values, I'm assuming, in early 2022. That's why I did it. So that time frame could be adjusted for you, but you don't want to have 3 years back when you're trying to fight last year's taxes. Obviously, we saw a huge increase in 2021, and 2022 across the entire country. So that's exactly what I did. Then I just started clicking on the local properties or the properties that were close to where my investment was. And I just started clicking on them, looking at the values, getting their address. And then once I grabbed the address, I would go to my city's property appraiser website, which is public record, and I could start looking them up. This is my property. And I started looking at how much they were assessed on. And you can see it's a little bit different. It does get kind of complicated. Everything was assessed at a much lower rate, but your city and state, or excuse me, your school system, your local and state schools, at least here, again, all these laws are going to be a little bit different depending on where you live. But for us, they don't put the homestead exemption on the schools. So that would be the full amount of what they assess it at. And these are already actually updated numbers from what I got it lowered to. So these are the lowered numbers. So 236,708 was what it got reassessed at after I went through this with them. And so this is basically how it's done. And then it's multiplied by the millage rate, multiplied by the taxable amount. Then you get a total tax. They add it up. That's your property tax bill. So mine currently is going to be $4,176.37. And previously it was a little bit higher, which I'll show you in just a second. But here's what you can also gain from this information is the size of the property, what the square footage is. And they even have a nice little link on our property appraiser's website that we can go to the property description, and that will break down what the land value is. And again, if you're an investment property, you're probably going to already know this from depreciation because you have to back out the land value. So here, you have to back out the land value at the time that you bought it. So this number is going to be a little bit different. This is going to be the value today, but it's valued at $182,801. That's the land. We can back that out of that total amount to figure out how much your structure is worth. And that could help you quite a bit because a lot of the properties around me have been renovated and some are being knocked down and getting new builds. But my particular property is a 1926 bungalow that has had very little updated to it over the years, really just paint and that kind of stuff. Nothing really major on it. So I think the property or the structure value is significantly lower. So it helped me make a little bit of the case by kind of splitting those up and comparing it to other properties. And you can basically figure out what the square footage of the land is worth in adjacent properties. That is one way that you can do it to kind of make your case. Again, if you get somebody on the phone in your city or wherever you're at, and they don't want to talk to you or they're going to be difficult, this could be a little bit more difficult for you. That's where the property appraiser or just filing a formal petition. But even if you file the formal petition, you're going to have to back it up with evidence, and that'll probably lead you to a property appraiser at some point. But this is really important. And here's why. Because it's not just you fighting for that individual year. So I'll tell you what that number was. So for me, it was the, what did we just see there? The 4,176.37, so 4,176, and where is it? It is $4,516 was the original amount. So after going through this, I mean, roughly maybe like an hour or two worth of my time, it saved $340.15. Now, again, that might not seem like a whole lot to some people, like, hey, why bother? Maybe that seems like a ton of money. Maybe you want to go do it. But it's going to be each and every single year. And I'm not going to have to fight each and every single year if they reassess it at some crazy amount. But remember those caps that I talked about? Well, they have to use last year's numbers and they can't increase it. So here's another example of a mistake that I actually made going through this whole process that I uncovered just recently. So I'll bring this back up here. Now, this is 2015. So this was the assessed value in 2015. And I made a mistake. And that mistake was I took this property, and I call it a mistake. Maybe it wasn't a mistake. I don't know if they would have actually adjusted it here. But the mistake that I made was I put this property into my business in 2015. So I bought this property saying, hey, I saw the property. I just wanted to get the deal done. I put it in my name and I just purchased it. And then I went through the process of opening up my business to put this property in the LLC. Well, in doing so, even though it was virtually right away, virtually a couple months later, it got reassessed again. So it didn't have to go by that 10% cap And you can see right there that it went up 13.34%. Now run those numbers out. So while it might not seem like a tremendous amount to you at this point, if we keep running these numbers out in 2037, it goes further and further all the way back to, hey, what if we made sure that our property value was as low as possible? Then they can't go above these caps on the assessed value each and every single year. And just imagine if this is a 3% cap, that would have been even greater, just because then you can make sure that even if the value increases 30% in 1 year, 50% in 1 year, whatever, you have these spikes in some of these years, it gets capped at 3%. So that could be more valuable. Of course, obviously, it's not compounding faster at 3% than it is at 10%, but it could help you. So looking at this, I just ran these hypothetical numbers out. Now, unfortunately, I missed the boat here. Even though it's only 3.34%, look what that turned into. That one single year. That's all we're looking at. That was an increase from one single year that if I were able to do it correctly in the beginning, that it would have been in the year 2037, 843 instead of 869. So that is why you want to go back and question your assessments. Now, what actually happened in mine was it was actually wrong. They actually made a mistake on mine too. So it wasn't just a disagreement, but it can absolutely come to that. Now, I'm still going through this process, and I want to come back to see if I can go even further than what it's currently assessed at. Now, property appraiser was like, hey, everyone should pay their fair share. And, we try to do the best we can. We think this is what the value is. That's perfectly fine. But on the same note, they're in it to help the city gain more money. And you need to look at it from your perspective and say, hey, my property is actually worth this. So make your case, because there's no point in overpaying. And it's not just getting it below what the market value is, it's getting it to the correct market value. And just because somebody down the street sold their house doesn't mean that you should have to pay more in property taxes. I understand a lot of people are going to say, hey, well, that's the way the system works. However, they have to do so many houses that there is no possible way that they can get your value as accurate as you could. So while they're professionals in their own right, they're on the other side of the fence. So they don't have necessarily your best interest in mind. They're trying to raise more property taxes, and they're trying to do it for the entire city, or they're at least trying to assess it, as they said, correctly. So we can agree to disagree on that, and you can make sure that your property taxes are as low as possible by questioning it. So don't be afraid to call your city. Remember, they work for you. You do not work for them. Ask them to explain. And if they don't, then talk to somebody else in the city to get them to explain, because again, they work for you. Treat them with respect, but at the same instance, question it, because you can get it lowered. And in this case, while it was only $340, it's still $340 that I would have had to overpay if I didn't inquire to begin with. So, and again, these things will then compound over time. So question it as quickly as you can, because unfortunately I can't go back to 2015 because of other laws. So the law lets you question this stuff, and the law lets you petition it, and the law lets you go and get a property appraiser to reassess it and to make your case. It's exactly what you should do. Don't just blindly pay your property taxes. So hopefully this has helped. This is something that I just recently went through. Just wanted to share with you, and let me know in the comments down below what you think, and we'll see you on the next one.